Welcome to Smart Wealth with Joshua.
Your daily stock analysis and catalysts talk. Today, we're looking at Filtronic.
If you find our talks useful, please consider subscribe, like, and comment underneath.
And before we get into today's stock, here is a useful tool for investors who want a faster and cleaner research workflow. You can check out stockanalysis.com Pro through the link below in the description. Use discount code ITP for 10% off. Stockanalysis.com is lightweight, fast, and works on desktop, iOS, and Android. The free version is useful for checking stock prices, financials, charts, forecasts, and news. But if you want deeper research, stockanalysis.com Pro gives you no ads, saves screeners, watch lists, portfolios, long-term financial history, dividend history, analyst filters, ETF data, and exports to Excel, CSV, and Google Sheets. Pro comes down to about $5.93 per month when billed annually after the discount. For heavier users, the unlimited plan adds unlimited downloads and unlimited stocks per watch list, and comes down to about $14.93 per month when billed annually after the discount. StockAnalysis.com is a research tool, not financial advice. It does not tell you what to buy or sell, and it does not guarantee investment results. Always do your own research and make your own investment decisions.
This is an affiliate link, so we may earn a commission if you use it at no extra cost to you.
Okay, so let's just get right into it.
Yeah, so imagine trying to, thread a needle, but you're actively riding a roller coaster.
Okay, that sounds completely impossible.
Right, it sounds insane, but that is essentially what a satellite in low Earth orbit has to do. Just to beam high-speed internet down to your house. I mean, it is moving at thousands of miles per hour.
Wow.
It's vibrating violently and enduring these, extreme temperature swings, all while trying to maintain a absolutely flawless data connection.
Yeah, that's no small feat.
Not at all. And today, we are taking a deep dive into the financial notes, the earnings reports, and the industry rumors about this tiny, relatively obscure company in the UK. They basically hold the engineering keys to make that connection possible. We're talking about Filtronic.
Right, Filtronic.
Yeah. And what's really fascinating here is that this company, they represent something highly unusual in the public markets right now. It is effectively a rare public backdoor entry into the massive, privately held SpaceX ecosystem.
Which is huge because, for average retail investor, gaining direct exposure to a private behemoth like SpaceX is, well, it's virtually impossible.
Exactly.
You'd need specialized, ultra-exclusive venture capital access.
Yeah, but through key supply chain partners, that door cracks open just a little bit.
Okay, let's unpack this immediately, though, because before we get swept away by the sheer excitement of, having a backdoor into the billionaire space race, we really need to ground this in reality.
Fair enough.
This is, at its absolute core, a turnaround story. For a really long time, this company was just bogged down in sluggish legacy telecom markets.
Right, the whole 5G thing.
Yeah, the broader 5G infrastructure rollout. It was supposed to be a gold rush, but it simply hasn't been the massive catalyst many hoped it would be.
Yeah.
And that stagnation really dragged them down.
It did.
But what we are witnessing now in the financial data is this deliberate strategic pivot. They are walking away from that lower margin legacy business and aggressively maneuvering directly into high growth, high margin space and aerospace and defense applications.
Yeah, it's a totally different ballgame.
It really is a fundamental shift in their operational identity, and that's the exact lens we need to view them through.
All right, let's move into the wealth building context.
Yeah.
Because if we are looking at this through the lens of long-term portfolio growth for you, the investor, we have to understand why this isn't just some quick momentum trade based on a flashy headline.
Yeah, exactly. It's not a day trade.
Right. The core thesis here is about gaining direct, tangible exposure to a multi-year deployment cycle. We are talking about the massive rollout of Starlink and next-generation low Earth orbit, or LEO, constellations.
And just to clarify for everyone what that actually means, older satellites, they used to sit in geostationary orbit, so way out in space, completely stationary above one specific spot on Earth.
Right, the big bulky ones.
Yeah, they were huge, incredibly expensive, and they had terrible latency. LEO constellations completely flip that model. They're much closer to Earth, which means high-speed data.
But because they are so close, they orbit the planet rapidly.
Right. So to get global coverage, you can't just use 3 or 4 satellites. You need a massive mesh network of thousands of them, constantly handing off signals to one another.
And building that network is a multi-year, highly capital-intensive project. By positioning themselves as a critical component supplier, Filtronic is essentially attaching itself to SpaceX's growth engine without investors needing that exclusive venture capital access.
Exactly. And that fits a very specific profile for a long-term portfolio. You are looking at a micro-cap turnaround play here. Investors are evaluating a company that is actively, aggressively transitioning its revenue base.
From the old to the new.
Yeah. The move from lower-margin legacy telecom to higher-margin aerospace and defense contracts, it changes the fundamental math of the entire business. But look, I really want to caution anyone listening right now, do not treat this as a quick flip.
Definitely not.
Think of it like building a structure on a piece of land. For years, that legacy telecom business was essentially sinking mud. It was a crumbling foundation that really wasn't supporting much growth.
Yeah, a tough place to build.
Exactly. These new aerospace and defense contracts, particularly with a major LEO operator, are like a freshly poured concrete bedrock. That bedrock is meant to support long-term, multi-year compounding. But, it takes time for concrete to cure, and it takes time for a turnaround to reflect fully in the share price. This is not about overnight riches.
Well, I mean, while I absolutely agree that patience is required while that foundation cures, we kind of can't ignore the data that's right in front of us. The growth trajectory is already aggressively accelerating.
You think it's moving that fast?
Yeah, it's not just a theoretical foundation anymore.
Yeah.
The walls are going up fast, and the financial metrics are already catching up to the narrative.
Now let's look at the fundamentals. Because if we are going to claim there is a concrete bedrock here, we have to prove the company actually has the financials to survive and scale alongside this massive multi-year space race. We can't just run on a good story.
No, absolutely not. And the financials are where this deep dive really starts to sing. Let's break down the dramatic revenue surge we saw in the first half of fiscal year 2024.
Right, the H1 numbers.
Yeah. Revenue shot up 53% to £13.5 million. I mean, that kind of half-year jump is precisely what an operational inflection point looks like. It tells you the pivot is working.
It does, but we really have to look under the hood at the margins, because top-line revenue without profitability is just noise.
Oh, for sure.
This is where things get really interesting, though. Gross margins expanded from 29% to 42%.
Which is huge.
It is a massive structural leap. But let's explain how that actually happens. It demonstrates exceptional operating leverage. When they were doing legacy telecom, it was just a race to the bottom on price.
Yeah, super commoditized.
Exactly. But in aerospace, once you cover your fixed costs, your research and development, your specialized manufacturing equipment, once that's paid for, every additional highly specialized widget you sell drops almost pure profit straight to the bottom line.
Right.
It shows that as these high-margin SpaceX contracts take over a larger percentage of the revenue mix, the bottom line benefits disproportionately. However, to maintain full objectivity here, we have to look at the full-year fiscal 2024 picture as well.
Right, the full year.
Yeah. For the full year, revenue actually showed a slight contraction to £22.8 million. Why? Because of those exact legacy telecom headwinds we discussed earlier.
The old business dragging it down.
Exactly. The old business shrank faster than the new business could fully take over the annual math. We have to be honest about that transition period.
That's a fair point. The transition definitely wasn't instantaneous, and the annual numbers reflect that drag. But if we look at forward guidance and analyst revisions, the market is already pricing in the new reality.
Yeah, the forward estimates are looking up.
Analysts have actually been pushing up their fiscal 2025 EBITDA estimates to somewhere between 5.5 million and 6 over million pounds. And, for those who might not live in financial statements every day, EBITDA stands for earnings before interest, taxes, depreciation, and amortization.
Right. It's a mouthful.
It is, but it's essentially just a way to measure the raw underlying cash-generating power of the business before all the accounting gymnastics get involved. The fact that those estimates are being revised upward shows a strong institutional conviction that the aerospace pipeline is robust and highly profitable.
And what truly secures that growth is the completely transformed balance sheet. This is a total reversal. Just 12 months prior, we were looking at a company with a £1.2 million net debt position.